Welcome to the next edition of Policy Square. In this edition, we have one of India's foremost policy makers with us. And let's welcome Mr. Vijayasai Reddy, an Honorable Member of Parliament representing the state of Andhra Pradesh. Mr. Reddy is the leader of Parliamentary Party for Vijayasai Congress, which, as we all know, is an important constituent of this parliament, being the fourth largest in strength in this parliament. Mr. Reddy is a well-known parliamentarian, as now in his second term as the chairperson of the Parliamentary Standing Committee of Commerce. A well-known person, a chartered accountant, professional by training, and very well respected in India's trade and commerce faculty. Welcome, Mr. Reddy. It's a pleasure and privilege to have you today. Clearly, as the globe and India recovers from the pandemic and India comes back roaring on the scene as a fast-growing economy, I think our listeners and viewers are very interested in knowing, in your stellar role as the chairperson of the Parliamentary Standing Committee on Commerce, what do you think are the agendas that are important at this stage? What are the things that you want to drive in this going ahead, and why do you think those issues are important?
Thank you very much. Thank you. The parliamentary standing committees are meant for recommending to the government of India on important issues as per on the subjects as per the guidelines that are selected by the majority of the members of the standing committee. While selecting the subject, the committee keeps in mind certain issues, certain aspects. One is relevance of the subject. Second is it should be ongoing issue. Third is it should be fresh in the minds of the people. Fourth is addressing a pressing issue at present by the people of India, and it should be purposive aspect of the committee for which the committee is constituted. And fifthly, it should have a wide ranging impact, in the sense increasing the export, how to increase the export and reduce the imports so that foreign exchange is saved. And for example, by reducing the imports and increasing the exports, we must be able to generate employment and save the foreign exchange. And based on these parameters, in 2020, the Commerce Committee, Standing Committee, has selected export of agricultural and marine products, number one, and 2021, attracting investment in post-COVID economy, because COVID has affected the Indian economy very badly. And also in 2021, we have selected a subject, review of IPR rights, and in 2022, very recently, we have elaborately discussed and submitted our report on one district, one product to the government of India. So we keep all these aspects in mind and select the subject which is very, very useful for the country and for parliamentarians to have a fair idea on the economy and trade.
I think this is really sharp and I think to the point, because one of the largest effects of the pandemic globally is on the bottom part of the population. And when we look at MSMEs, when we look at our farmers, I think the issues that you mentioned in terms of looking at agriculture, fisheries, and the products that India is otherwise good at, and how do we make sure that they contribute in a large measure to the growth of the Indian economy. I think this is very, very topical. But coming back to the point that you just mentioned, and I think that's very important, the committee worked on how to attract investments into India post-COVID pandemic. So what were your thoughts on that, and what's the committee thinking?
See, we'll have to think of background of the Indian economy. Indian economy has severely been affected because of the pandemic. In 2020-21, particularly, the GDP of the country has come down by, it was minus 23% in the first quarter of April to June. It was very bad for the country. And the second point which we will have to consider, keep it in mind, is the developed countries or developing countries should not have a over dependence on a particular country in terms of global value chains, on a single country. For example, China, many countries in the world are dependent on Chinese product, which is not good for any country for that matter. Government of India, thirdly, is running a flagship program of Make in India and Atmanirbhar Bharat, and the Prime Minister's clarion call on vocal for local and local for global. That is the slogan on which the Government of India is working, and all the states are cooperating, and the Parliamentary Standing Committee on Commerce, our committee has made a detailed study on various aspects like electronics, electronic trade, pharmaceuticals, medical devices, plastics, and toys and steel sectors. These are all the areas where we have studied in detail and made a presentation, made a report to the Government of India. And the challenges while doing this, will be facing so many challenges. The challenges is more, the topmost challenge is the trade imbalance with China particularly. The total trade with the China, trade imbalance, total trade with the China is about 125 billion, and out of which 100 billion is the import and 25 billion is export from India to China. Thereby, the net trade imbalance is 100 billion, which is significantly large. 100 billion is not a small amount. It is almost about 7.6 lakh crores of rupees, and for India it is not a good for the country. And the next aspect which we take into consideration is high cost of finance in India, which our manufacturers and domestic traders and domestic manufacturers are facing. When we compare the cost of finance in India, for example, whether it is a packing credit or whatever, or working capital limit, or any credit for that matter, export credit, it approximately costs about 14%, 15%, depends upon the health of the company. And whereas in developed countries like China of course, I mean in America also, it is 2%, 3%, 4%, much below than what the cost of finance we have in India. See, this will adversely affect the competitiveness of the Indian manufacturer. So, the credit facilities that are being provided, in fact, to the entrepreneurs in India are not known to the many entrepreneurs. So, awareness has to be created as to the facilities that are available to the domestic manufacturers. And thirdly, the regulatory hurdles. The regulatory hurdles that are being faced by the Indian manufacturers. And for example, enforcement of contract. Any contract that is executed between two parties, if it is to be implemented in India, it has a long process. And Indian courts will take years together to deliver the judgment, which is not the case in the case of other developed countries. So, there has to be a rationalization and then simplification, and procedural aspects in the courts have to be reviewed. So, India in fact is ranked 163 in enforcing the contracts. It is that indicates the lacuna in the judicial process. The committee therefore has recommended, our standing committee has therefore recommended the steps should be taken to simplification of litigation process so that 163 rank can be improved further. And poor quality of infrastructure, which our manufacturers are facing. The infrastructure has to be improved, and high logistic cost in India is another aspect which the Indian manufacturers are facing, which is hovering around 13 to 14%, whereas in other countries it is only 5% to 6% or 7%, almost double the logistic cost what we have in India. These are all the aspects which committee issues, which as committee has elaborately discussed and then finalized the formulation and recommended to the Government of India for finalization and introduction of national logistics policy, which will cater to the Indian manufacturers. So the opportunities attract. Finally we have also submitted to the Government of India saying that the countries during the COVID, there are many multinational companies have left China, and we must be able to attract those companies to India by providing attractive shops. These are all the recommendations what we have made.
I think that is fairly comprehensive recommendations that have come out, and I think you make a very interesting point that while there is a clearly large uptick in our rank in ease of doing business, but within the ease of doing business parameters, there are some parameters that still need attention, and one of them being the matters of litigation and how we can do that. There is some awareness of the government in setting up commercial courts, but we take the message from you as chairperson of the committee that there is need for doing more on that. You also make an interesting point about value chains, and clearly I think that input from the standing committee government has taken seriously, because from Make in India and Atmanirbharta, it has also now changed to Make in India and Make for the World, and therefore the attempt to capture the global value chains and find value here. In that respect, government has come out with certain number of schemes about to attract that. There are a number of productivity linked incentive schemes in various sectors that have come out. So what are your thoughts on these actions that the government is taking to facilitate this?
Production linked incentive scheme is one scheme which the Government of India has introduced, spread across 14 sectors. The 14 sectors in India are covered with the total allocation of 3 lakh crores, and has a lot of intended benefits for that. So number one, the first benefit is the enhanced value addition in manufacturing sector. That's a very good benefit, and attracting the foreign investment. The production linked incentive scheme will definitely attract foreign direct investment into India. Then it creates direct employment and also indirect employment, and over 30 to 40 lakhs jobs. That is what the target of the Government of India is. Move manufacturers from specific sectors like man-made fibers. These are all the benefits what the Government of India, while introducing this scheme, is envisaging. And this will help India in becoming Atmanirbhar country, and the country which not only manufactures itself for itself, but also exports to the other world. This is the objective. And there are some potential challenges in the scheme also. Potential challenges are execution delays, which are more prevalent in India, availability of requisite infrastructure, and law and order issues, even though it is a state subject in various states, and delays in approvals. These are all the challenges which we face. Government of India is striving hard to attract the foreign investment and provide all infrastructural facilities, and the scheme which will not be challenged in World Trade Organization. And because according to World Trade Organization, you can't give certain benefits to the exporters to make it, because it has to be a competitive in the world market. So, without getting attracted to the World Trade Organization restrictions, Government of India is doing a lot.
Thank you so much for your very motivating and invigorating words. I think our viewers and listeners will take forward your message, learn from the past, be situated in the present, and then work hard to make work for a glorious future. We thank you for your time today, sir, and wish you the very best in your future endeavors. Thank you.